Good day, everyone. You're welcome to this week's Business and Investment Tips program, a production of RCCG Christ Church Radio with Dr. Ayodeji Ebo, an investment professional. This week, the focus is on June 2025 inflation and MPC outlook, cooling prices, calmer policies. Last week, the National Bureau of Statistics, (NBS), published the June 2025 inflation report. The report showed a continuous decline in Nigeria's inflation rate. The headline inflation for June came in at 22.22% year-on-year from 22.97% in May 2025, the third consecutive drop. However, on a month-on-month basis, prices rose 1.68% in June, bucking the three consecutive months of decline from 1.53% month-on-month in May 2025. The moderation can be attributed to improvements in FX rates and lower energy prices, which offset the upward pressure from food and food-related items. Food and non-alcoholic beverages, restaurant and accommodation services, and transport were the main contributors to the headline inflation, accounting for a combined 14.13%. Conversely, food inflation, which accounts for about 45.3% of the headline inflation basket, increased by 21.97% year-on-year in June 2025, up from 21.14% in May 2025. On a month-on-month basis, food inflation rose 3.25% in June compared to 2.19% in May 2025, driven by ongoing insecurity in food-producing regions. This can be attributed to rises in prices of green peas, peppers, shrimps, meat, and tomatoes. Similarly, core inflation, which excludes food and energy prices, increased by 0.48 percentage points year-on-year to 22.76% in June 2025 from 22.28% in May 2025. The rise in core inflation was mainly driven by the boost in year-on-year prices of service-related items. We expect further moderation in the year-on-year inflation rate in June due to continued stability in FX market, a decrease in petroleum prices, and a start of the harvest season. Ahead of MPC, the Central Bank of Nigeria's Monetary Policy Committee, MPC, will hold its 301st meeting beginning today, July 21, and concluding tomorrow, July 22, 2025. Since the last meeting in May 2025, global pressures abated, local inflation has decreased, and the Naira has remained relatively stable to improve FX liquidity and lower demand. Given these trends, the MPC may contemplate a slight policy adjustment. We anticipate a cautious 50 basis point cut in the monetary policy rate, MPR, as committee aims to support growth while maintaining price and currency stability. Investment strategies to hedge against inflation. Despite the declining inflation rate, investors are urged not to leave their idle funds in savings accounts. Instead, consider opening a high-yielding savings account or saving with reputable platforms that offer higher returns. Additionally, you can take advantage of attractive yields in government treasury bills with a minimum investment of 100,000 naira available in the secondary market through various investment firms and banks, as well as commercial papers that have a strong credit rating. Additionally, investment in dollar-denominated assets will also provide a hedge against inflation due to the persistent depreciation of the naira. Investors with a high-risk appetite and a long-term horizon may consider investing in Nigerian and US stocks with strong fundamentals. Thank you for listening. Please join us same time next week for another exciting and insightful session. For questions, comments, and feedback, kindly forward to ebo.ayodeji@gmail.com or send an SMS 07082463747. Stay blessed and have a great week. Bye.